It's your boy, the one on the stock sniper. And we're getting ready for this great market to open this morning. We know that Israel struck Iran, so that's the reason why the big drop overnight. We got 1 minute before this bill opens. Let me do this over here. Get all this ready to rock and roll. And here we go. Okay, so it is Friday. So it's the last day of the stock market being open for the weekend. Close for Saturday and Sunday. Okay. We got 30 seconds left before we ready to rock and roll. Let me get this right over here. Oh my God. Well, we'll just rock with it like this for now. Close. We got 8 seconds left. It's Friday. Yeah, the whole market is down because of that war news, right? Israel hit China, and of course, it affects the stock market. So we're going to see what this day going to bring us today. Appreciate y'all for joining me. I'm your host, the one and only Stock Sniper. I'm going to have to go back and forth to see what's going on, which is cool. We got an uptick. The market is open. And we ready to rock. First minute that the market is open. Let's see what's going to happen. Try to pick a push. Trying to make the push. Can we get above the 50? Boy, what a movement. What a movement. What a movement. Lower shadow right there. Trying to see if we're going to make that move on up. Or move down. The whole market is red. We had the war news. So we're going to see what it's going to do. $143.58. Big lower shadow. Eat it on up. Eat it on up. Another lower upper shadow. Looking for the push on up at this time. Can we get above 58? Another upper shadow. The whole market is down this morning. The whole market. We will see, can we get a bounce? It looks like we're going to crack, though. That's what it looks like. Look at this big upper shadow right here and right there. See.
Yeah, lowest since the end of January but it's still, I mean, it's not as if there's that many more bulls than bears in the AII poll, and the professionals are a little more restricted. Now, where it's getting nutty is in the retail trader-driven stocks. I keep talking about that. It's almost a separate market. I mean, the IPOs that are flying off of their offering prices, the quantum stocks, the stuff that just is really kind of like gamey lottery ticket stuff is wild. But it's not more broadly getting into the valuations or the sentiment set up for the core of this market. Right.
Yeah.
Mike, thanks. By the way, FTSE's green as we speak, so we'll see if we can manage to follow their tracks.
Speaking of IPOs, I mean, Chime obviously had a very strong debut yesterday. Stock is down a bit this morning. Pricing at 27, had traded well above 40. Did that. But again, we've seen a very positive response, as Mike said, to a number of the IPOs that have been brought to market of late. Certainly, we know about the performance of CoreWeave or Circle or eToro and on from there. Voyager earlier this week as well. Oracle continues its climb, another 2% off of that 13+% climb yesterday. As it ascends towards a $600 million market value for Oracle after very well received earnings from the database software company, also considered sort of somewhat of a hyperscaler as well. Larry Ellison, all those positive comments. Obviously, his net worth going up by some $30 million at this point on this move alone, as his 40+% ownership. You can figure out the math there in terms of what that means, guys. And Adobe, we mentioned a number of times. The stock is down 6% on earnings. The AI business growing at more than 20%. They put in some
price increases. Something a little bit different today.
They iterate double-digit growth, but Sarah, not perhaps enough. At least today, not enough. Even though the response I got, I only talked to a couple of people, was quite positive to the numbers.
Yeah, down 6%. Not a thumbs up there. I was just going to point out RH, which is another big earnings mover, a company formerly known as Restoration Hardware. It's been such a crazy mover of a stock this past year or so. It's up 23.5% after, I don't know, kind of a mixed quarter. They did reaffirm guidance, so that was good, and they expect still
double-digit shadow forming right here.
Always colorful. The CEO complained again about the state of the housing market and tariffs and inflation. Listen to what he said on the call.
When all of a sudden you get, 45% tariffs.
The thing is,
tariffs, 100-something percent tariffs. You don't just go, oh yeah, business is normal. Business as usual. Keep on shipping. I mean, we're like, hey, stop the shipment. The manufacturers don't know what to do. They're like,
oh, shadow.
Hey, can I ship this?
Can we make a move on up?
A lot more. That was a shocking thing that happened. Liberation Day for business. Yeah, I mean, we're lucky for big business. I mean, it's devastating for small businesses that don't have flexibility.
You may remember that
your
last earnings report came out right around, or not, if not on the day of Liberation Day. So that stock had been really pummeled on the
And
back
the war
of tariff
news.
concerns and just overall performance. Even with this gain today, for the past 3 months
Gotta
now,
be
it's
careful.
flat. So it's been a big underperformer. And they've really taken steps to reduce exposure to China over the last few weeks or so. Sourcing out of China decreases from 16% in Q1 to 2% in Q4. Gave those numbers.
Yeah, Kramer's talked a lot about their agility in exiting the China supply base. The stock, you're right, was $450 4 or 5 months ago.
Yeah.
Yeah, it's down 55% to year to date into this. I mean, market's up, what, 3% or so?
Guys, wanted to quickly just weigh in on U.S. Steel, a story I've been following for years now in terms of that acquisition by Nippon at $55 a
Support
share. Remember,
right
reports a few
there.
weeks ago, a lot of fanfare, and then the president showing
Trying
up.
to see if we can
in
make a move on
Pennsylvania.
up. We're above the EMAs.
But some questions, or at least concerns, given the timing now.
Good Lord Shadow right here.
Next week, you need 3 business days to close the deal.
Trying to see if we're going to make a move on
Not
up.
allowing the transaction was expected to be reversed, perhaps at a signing ceremony.
But of course, it's Friday.
That said,
There's a lot of scarcity because of the war.
confident that they are going to get there in terms of the negotiations.
Israel hit Iran.
Sort of governance.
That's why we had the big drop overnight. We were doing good, bro. We was about to get above 145
Do not actually impact
until that happens. Till that happened.
And their only goal, and the only thing they're going to be
So we got to be careful today.
Which is buy the company at $55 a share. And so there is a hope and expectation that
Gotta
perhaps
be careful.
today, or certainly in the next day or two, and I believe Secretary Lutnick has been involved in this negotiations as well, that they will get that executive order.
Gotta be careful.
And then they will find themselves in a position to close the deal within the required 3 business days, getting in under the wire in terms of at least what could be a difficult negotiation to have to extend the merger agreement yet again. There's been some reporting out of Japan, a Nippon executive just reiterating, we got to own this thing.
Yeah, he said
gotta be
that
careful.
they're requiring a, quote, degree of management control
Yes.
for the deal to go
And
forward.
so figuring out what that means, which still allows Nippon to actually buy the company, has been the issue. These golden shares, governance provisions. Again, there is confidence on the Nippon side. They are going to get there, but time is certainly of the essence, given we kind of thought a few weeks
Wow,
back,
what a bounce off the
original
142.81.
that it was going to just happen.
So it's going to happen?
I think it's more likely than not. Yes, Sarah. That said, at this point, given I've already been on the record saying the expectation was they would be able to close at 55.
142.81.
But yes.
I mean, they did get President Trump on this side of the deal.
I mean, you have to think about the alternative, which is it doesn't happen, and then what? All those steel workers who are going to get $5,000 each, the $14 billion in additional investments not going to happen. You'd imagine politically that's not an outcome they want. But how they do get to this governance provision has been proved to be a bit more difficult, and Secretary Lutnick certainly has been involved in that as well.
Yeah, just add another thing to his plate. He's negotiating a bunch of sovereign trade deals and now corporate deals as well. Closer look at the markets here and reaction to the geopolitical news overnight. S&P is down 0.6%. Scott Kroner joins us, Citigroup U.S. equity strategist. He's here at Post 9. He raised his year-end S&P target to 6,300 this week from 5,800. So kind of catching up with the market.
Right at VWAP.
Continue to make new highs, although a step back today. How do you think that what happened overnight impacts the U.S. equity market, if at all?
Yeah, Sarah. So the way we've been talking about it is, okay, great. We pushed our target higher, 6,300, roughly 5% upside in the second half of the year. Got that. We know that we're going into this with a close to overbought condition on the Nasdaq, at least to a certain degree, the S&P, and volatility's come down quite a bit. You see that in the VIX levels, which have begun to come off the bottom recently. So what we said is this is probably not going to be a year of summer doldrums. There's going to be ongoing volatility metrics that come into play, whether it's policy related. Now we have geopolitics.
Trying to see if we're gonna break down or not.
Here. Our presumption when we usually look at these types of activities is obviously where the path you go is escalation or not. But from there, it's like starting point for us is what's the impact going to be on global macro conditions? What's global GDP going to do as a result of this? Okay, and that we'll see more on that, but my guess is probably limited. What that then does in my framework is come back to probably not a massive influence on underlying S&P fundamentals. Bottom line, initial take here is be prepared to buy volatility related
Well,
weakness.
7.5% move on oil prices is not nothing. I mean, there are
He's
those
trying to
who
catch a
worry
bounce
about
right here,
1970
142.80.
style stagflation. We've got tariffs coming in. Haven't seen an inflationary impact there yet, but if we do see a sustained move higher in oil, is that a concern?
At some level, it's a
Getting
concern.
wishy-washy at this time.
But there's always like a be careful.
But we all building.
This. So and when we look at our
We're all building
for example,
a good support.
270, we're now at 261, and we had come down.
We're building a good support.
Has been the biggest drag on S&P earnings versus where we started the year. So so what you end up potentially get here is some relief on the fundamental front for that part of the market. I completely get the inflation read through. Again, that's
building a good support. Yep.
Higher oil price setup, and there's been a lot of discussion about still many sources of supply to be tapped into. So we're not going to stretch too far in terms of presuming a persistent.
Yeah, today's going to be one of these days. Up, down, up, down, up, down, up, down, up, down. But we all building support at 142.80.
And does today, if it's sustained, make that more difficult?
So I would say not much of our view. Like we've been presuming consensus, you get another Fed cut or two into the end of the year. Honestly, I think the consumption trends that we've been looking at support a Fed
trying to get back around.
But that's a little bit more of getting ahead of the data, and the Fed has shown a proclivity to want to see the data. What is really contingent?
We got an upper shadow going on right here.
Begun to move away from this tariff overhang. You're seeing the company-specific responses, and companies aren't standing still on this. And at the same time, you've got the ongoing AI tailwinds that are probably, if anything, broadening now versus where we were 3 months ago. So we think the underlying inertia from a fundamental perspective is actually in pretty good shape, with this issue regarding broader economic activity out there as a potential sore spot, but not a big swing factor yet.
So not necessarily any danger of tariff hurting margins, hurting capex, right? That's been one word.
Coming back down to that support.
The capex numbers, if anything, are broadening, right? And what I would come back to at the same time, which is so fascinating about this market, is you're seeing the repurchase activity pick up as well. We've been talking for a while now. The S&P has been in this mode where it's reducing its fully diluted share count by about 1% a year. And we had said earlier in the year, $900 billion in repurchase is probably line of sight. You could get to $1 trillion. The trillion's looking to be pretty conservative at this point. So a lot of free cash flow generation.
Here we go, right at the support.
Flexibility, capex down the AI path, and this.
Got a lot of bounces. 142.81 support. Let's see what the next candle gonna do.
We do have a Fed meeting next week. Nothing's expected, but there are questions about whether the Fed will be cutting sooner rather than later. And I do wonder, with a move like this,
another
oil,
support.
Changes the conversation at all.
I did
Great support right here. We're above the EMAs.
I completely understand that, and that's where it's going to be the persistence of oil prices is going to be.
But we also got resistance
keeps them on the side
at 143.15.
We look at the consumption trends. They're showing some signs of weakness, and when we actually look at it through an S&P 500 lens, consumer discretionary and staples within the S&P, Q1 wasn't great. There was a notable deceleration in retail sales activity. So again, you look at the employment data, and everyone's massaging it down, different lenses. And even there, I would say there are some signs of issue here that, in my mind, the Fed potentially could be ahead of, but that's not their profile, particularly with last night's events.
Okay, Scott, thank you for joining us. Appreciate getting the instant reaction, especially after you upgraded the market. Scott Proner. Before we head to break, it is time for the bond report. Show you how treasuries are faring this morning. Quiet data day. We do have University of Michigan consumer sentiment at the top of the next hour. Yields are higher. You might have expected them to go lower on a safe haven bid for bonds, but as Mike Santoli said, it's not like you're seeing this mad rush or dash to safety across assets. Gold is a little bit higher, the dollar's a little bit stronger, but if you're balancing out inflation worries against the geopolitical concerns, maybe you get higher yields. 10-year just below 4.4. We'll be right back. I'm Rachel Wilford-Jones.
Might get a big end of the day sellout because we don't know what's going to happen
Control Risks is a global
over the weekend.
We
we do have quite a privileged position in the media space where we get called quite often for our analyst understanding.
We don't know what's going to happen.
The impact of a political or geopolitical decision and what that might
But we
mean.
did get a sell off from 145
throughout the Asia Pacific region.
and from
the way
603.
Trust is just making sure that we have consistency and clarity.
And she was just hovering around at 600.
Before is no longer the marketing of today. To stay open-minded and know that last time maybe
that's all we're doing right now, just hovering around at 600. We are trying to build higher lows. On the S&P. We right at what? 30 minutes in or 20 minutes in? Another bounce off of the VWAP. Yeah, we're both basically moving sideways right now. We're basically moving sideways. Yeah, basically moving sideways. You know how Fridays can be. Wow. What a move, bro.
Now to the very latest on that Air India Boeing Dreamliner plane crash that killed all but one of the 242 passengers on board. Responders combing through the rubble for at least one other black box. We think we have one so far. CNBC TV 18 reporter Medea Mujawar is
what
live
just
on the scene.
happened?
Medea, good morning.
That was only with NVIDIA, though.
Well, the aviation accident in India, in Ahmedabad, is not only one of India's worst aviation tragedies, but also one of the worst aviation tragedies for the world.
Big move, a quick move on one counter and back down.
The black box has been
that was weird.
by the investigating teams, and that is going to help
you
the
see
team
AMD?
Understand what happened in the final moments. How the aircraft crashed is.
That was weird. One quick push up, right back down. One push up and then right back down. You see what's gonna happen. Nothing much. A big buyer came in, I guess. 143.50 at its tough resistance. That's why we ended up coming back because of that.
Okay, thank you. Thank you. Let's turn back to rising tensions.
All right, let's see what's going on. Rising tensions in the Middle
Nuclear
East.
sites overnight. Gold is near 2-month highs. Oil, as you've seen throughout the session, of course. And by the way, not up as much as it was earlier, but still up some 6.6%. At the highest level it's seen in 3 months. Because Stevens is tracking all of that action, a lot of other commodities as well. Pippa.
That's right, David. So oil is still up 6%, but as you said, well off the highs of the session after WTI at one point jumped 14% overnight, underlining the fact that so far no oil supply has actually been disrupted, with several firms saying prices cannot sustain these levels unless barrels actually come off the market. The focus now turns to Iran's response, since that is likely what will dictate oil's next move. The country itself is not a major supplier, exporting about 1.5 million barrels per day, but the fear is that a wider conflict could disrupt the region's oil supply, including possibly in Saudi Arabia or Iraq. But the biggest possible impact could be a potential blockade of the Strait of Hormuz, with about 20% of global oil flowing through the key waterway every single day. CIBC Private Wealth's Rebecca Babin said it's still a low probability scenario, but that the odds are rising as the situation evolves. Also, keep an eye here on global nat gas. European prices jumping 5%. The Strait of Hormuz is the sole export route for Qatar and the UAE, which together make up about 20% of global LNG supply. Guys?
Pippa, thanks. Quite a remarkable story, and it's not just about the raw commodity. The XLE, I think, is up every single day this week, and we know what a laggard it's been on the overall index, as Scott Cronin was alluding to earlier, not just on the price action of the shares, but also earnings power, too. We'll see what energy can do on overall.
Already
earnings.
a bit. I mean, for the week to date, it's up almost 5%. So we saw a bit a little bit earlier on this idea that some of the losers were being bought, Carl. But yes, today it is the only sector higher, and that's largely geopolitical, as Pippa laid out.
VIX briefly popped above 20, then back below, currently hovering right around those levels. I would argue the only one
Got another bounce off the
didn't
support.
get to, guys, was this journal piece.
It's holding at
about Walmart and Amazon
142.81
considering their own
as of right
stablecoin,
now.
which is a story, but the bigger fallout has been the impact on Visa and MasterCard.
It's holding to 142.81.
Visa shares down over 5%. MasterCard similar, one would expect. You know, the idea is they pay so much interchange fees. There's the friction around just with their billions of transactions that take place is quite significant. And if in fact you launch your own stable coin, you might be able to eliminate a lot of that. The Genius Act that's still working its way through Congress obviously proves very important for this.
Yeah, although Janet Yellen told us yesterday that she didn't think it actually had enough protections in it and didn't see a use for stablecoin, which is interesting given the story that just came out.
That was the last administration. They didn't like.
Yeah, we're probably gonna move sideways the rest of the day.
Does.
Embraces it more.
Yes.
Yeah, but here's a use case, I guess,
Yeah,
to the point
totally.
where we haven't really seen it otherwise.
And I mean, stablecoin obviously.
Blue Sale. Celebrate America with a 20-pound grill feast. Just $119, packed with ribs, steaks, and chickens ready for the holiday. Craving seafood? Dive into a 4-pound case of king crab for only $99 or a 5-pound case of snow
Oh, I
crab
don't
for
want
$40.
that on there, bro.
Don't miss these star-spangled savings only at the Hickory Shop. Visit
Let's see how I can change that.
shophickoryfarms.com.
Well, we had a little mix-up right there. All right, we broke support. Finally broke that support line.
This is something that's very close to all of us at DBS.
Let's see what's
we were
gonna
set
happen.
up in 1968 to help Singapore industrialize. So purpose is very centered in our DNA. Increasingly, I
Still
think
trying to
purpose
hold
is
this
even more
area.
so front and center. And businesses that operate in society today need that social license to operate. So rather than talk about the fact that we are purpose-driven, we demonstrate true stories of how we've actually helped customers to grow their businesses. And that's something that we take a lot of pride in.
73.
Within a few seconds or so, we get all the information sort of pumped up to us. So knowledge is no longer a competitive advantage. Knowledge is commoditized. I think the ability to synthesize knowledge, to use it and to apply it, and the ability to empathize that heart and soul as a marketeer, bringing that together, I think that's what's going to make a difference.
This is a bad idea. We said we try every event before the Winter Olympics comes to Italy. We should not be on snowboards. We want to get on skis, right? They go 100 in the downhill. How about curling? Well, we could do that with sandwiches or a nice bruschetta. How do we get down from here?
Back above the support line.
Is the most ambitious audience there is. I've raced cars for about 30 years. Car racing is so hyper competitive.
Man.
Kind of like the financial markets. Competition
What a move.
is a huge part of ambition. With artificial intelligence and electric vehicles, everything
all that wishy-washy up down
is going to require huge growth in energy. And as the chief energy,
yeah, it's time to hold out today.
The most exciting time.
Just hold out. Big upper shadow.
Good Friday morning and welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber, live as always for you at Post 9 at the New York Stock Exchange.
Big upper shadow.
Stocks are selling off, not an extreme reaction after Israel
142.81, big upper shadow.
Facilities overnight. We are seeing a big move higher in oil. That's where the immediate impact is being felt. The S&P is down 0.8%. It's coming off of a strong run, though, for the week and for the past few weeks. We're only, 2.5% off record highs for the S&P 500. Energy is the only sector, though, that is higher right now because of that move in oil prices. Everybody else is lower. Consumer staples are holding up the best. Not a surprise. The defensive names, staples, utilities.
Yeah, it's Friday. The way it's moving like this.
Financials, for instance, consumer discretionary.
It's basically sideways.
In particular, take a look at treasuries. Not a huge
right when you think it's going another way, one way it goes the other.
The dollar's a little bit firmer, but
a day not to trade.
Yields are actually higher, 4.4. Maybe
the day not to trade.
The inflationary impact of
unless we can get
right
above.
now. We are going to discuss it all hour long. Israel's
this
striking
area
global
up here.
Markets impact. We've got a great lineup of experts for you to break it all down. Mohammed El-Arian,
got to get back above
oil and energy
this
expert Paul
area
Sankey,
right here.
Former Trump National Security Advisor H.R. McMaster will all be our guests this hour.
First, let's get straight to Megan Casella with the latest on Israel and Iran and how Washington is responding. Morning again, Megan.
Hey, good morning again, Carl. So the president making a round of calls to reporters this morning, telling various outlets, including the Wall Street Journal, that he and the administration knew about Israel's plans to attack Iran before they happened. He also called the attacks very successful, said that he had spoken with Israeli Prime Minister Benjamin Netanyahu yesterday, and Netanyahu's office now says the two men do plan to speak again today. All of those comments coming after the president earlier this morning posted that he had given Iran chance after chance to make a deal, but that they just couldn't get it done. He says Iran now has perhaps a second chance, warning them to make a deal now, he says, before there is nothing left. So standing very closely aligned with Israel here, even after the White House first emphasized overnight that Israel was acting unilaterally and that the U.S. was not involved in these initial attacks. Iran seeing no daylight between the U.S. and Israel, saying that the attack would not have been possible without U.S.
But it looks like they want to stay above 142.81.
For the consequences
but we're basically moving
So
sideways.
as a result, the U.S. now bracing
on
for retaliation in the region while warning Iran against it. Secretary of State Marco Rubio saying that Iran should not target U.S. interests or personnel. And on Capitol Hill, hearing similarly, House Speaker Mike Johnson saying this morning
maybe we
that
should stay
Israel
over here.
is clearly within its right to defend itself. And that, quote,
stay
Iran
with Tesla.
will face grave consequences if it responds by unjustifiably targeting U.S. interests. The U.S. now on high alert in the region, calling for voluntary departures for non-essential staff earlier this week. And the AP, just in the last few minutes, now reporting that the U.S. is shifting military resources around in the region in response to this idea of potential retaliation, guys, as soon as later today.
Megan, to the extent that there
Tesla got buyers coming in. Tesla's above the VWAP and the EMAs.
Ahead of time. Do we know why the Israelis chose now?
Let's see what's going on over here.
They say that there are a few reasons. They think that this was an existential crisis for them and that it was becoming to the point where Iran clearly did not seem to be getting any closer to a deal with the U.S. There are some reports that some of its uranium enrichment that the U.S. might have been agreeing to or likely to agree to in a deal was going further than Israel could really accept. There were also international bodies that just this week began to warn about Iran's nuclear capabilities and how close they were getting to the ability to develop a nuclear weapon. So a lot of things there that Israel said it had to happen now, but it does seem like it came for the U.S. side. That's what we're still parsing here between the different reactions so far, but it seems like the U.S. was still trying to pursue these negotiated talks before this type of approach was taken. That's sort of the fine line here.
What's up, Jonathan Davis?
From the White House on that.
And Don, how y'all doing? I just was able to look and see what's going on in the chat.
They haven't done before and haven't necessarily
appreciate y'all for joining the show.
Thank you, Megan. Megan Casella.
I got a different setup.
We're monitoring their reaction to see sort of where everyone is coming in and what might happen next. Keir Starmer, the UK Prime Minister, posting, "The reports of these strikes are concerning, and we urge all parties to step back and reduce tensions urgently. Escalation serves no one in the region. Stability in the Middle East must be the priority, and we are engaging partners to de-escalate. Now is the time for restraint, calm, and
we're
return
back
to
on
diplomacy." Proving why
Tesla is below the VWAP now.
As for the Chinese, the foreign ministry saying that they're highly concerned about Israel's attacks on Iran, deeply worried about the potential serious consequences of these actions, and opposes any violation of Iran's sovereignty, security, and territorial integrity, opposes actions that escalate tensions and expand the conflict. You know, that's when we start to worry about how the sort of battle lines are being drawn around the world if China would support Iran, if there's
Lower
some sort of
shadow
confrontation
on Tesla,
from the U.S.
back
Saudi
above
Arabia
the
also,
VWAP.
people are, you know, in the markets, we're always looking to see where they stand publicly, at least. The foreign minister is saying His Highness expresses the kingdom's
Let's see what's
condemnation
going on with
of the
Tesla.
blatant Israeli aggression against the territory of the Islamic Republic of Iran. His Highness affirmed the kingdom's rejection of the use of force and stressed the importance of dialogue to address disputes. His Highness also emphasizes that the Israeli
might
attack
take a
undermines
small
efforts
trade
aimed at de-escalation
with
and
Tesla.
reaching diplomatic solutions. So there's a lot of
Might take a small trade with
nations
Tesla.
here calling for diplomatic resolution, which is clearly something President Trump was trying,
Not
but the Iranians
NVIDIA, not today. Look,
rejected that. As for the
it's
market
not much
impact,
of a
where you
movement.
look first, guys, we've been talking it. Obviously, crude oil, WTI, and Brent spiking, although coming off the highs. The U.S. dollar is strengthening against other major currencies. Again, not a huge move right now. It's up 4/10, and as Santola
right when I
said
switched,
earlier,
it came
it's due
back.
for a bounce because it's
We
been
got that
very
push on up on
oversold
Tesla.
and almost at a 3-year low. Gold higher, Bitcoin lower. Just kind of an interesting dynamic there if you're looking for where people go immediately for safety right now. But again, not an extreme move. And then treasuries. We look at treasuries because they're selling off. And during sort of extreme periods of uncertainty and a rush to safety, you see buying of treasuries. Is it a sign that treasuries are no longer safe havens? Probably not, because as I mentioned earlier, you're not seeing extreme buying of any global bonds. It's not like, you know, Swiss bonds.
I like this setup right here because the people can see
certainly not
a whole lot better.
So we'll continue to monitor the fallout. But David,
The phone version,
the equity market
you
reaction
know,
not
it's just
being as
like
sharp or severe as you might have
for
thought.
the live feed and the short feed, you get more views
It wasn't necessarily an extreme fear
on
moment
that
right
version
now, whether it's
than
because it
this.
looks contained to the region.
But I like this version
or we
better.
don't necessarily know what's going to happen next, whatever it is.
This is the real
market reaction.
Although, to your point,
setup that it should be.
So yeah, sometimes you would expect
Everybody can see
more severe, perhaps,
what's really going on.
Given it is raises.
So I like this a little bit better.
The US was not involved.
I'm thinking about taking a small position,
but in this
very small,
maybe it just sort of
with this
decreases a
Tesla.
little bit of the risk of something bigger and broader for now.
Yep.
Although, I mean, people are looking at the president's post this morning where he says he told Iran that this could be worse than they know and that the United States makes the most advanced and lethal military equipment in the world. I mean, that's the kind of language that makes you have to second guess whether or not we're truly going to remain in a non-participatory role.
That is the whole question: is what is the U.S. role going to be in all of this, and what does the U.S. need to do, and how much progress has Israel made overnight when it comes to dismantling, and what else do they need to do? Because even the Israeli authorities have said this is it's not over. This is going to continue until we feel like the threat is reduced.
Let's talk some more about the market reaction this morning. We also just got the preliminary read on UMISH, better than expected, coming in at 60.5. We were looking for 54, and the one-year inflation drops from 6.6 down to 5.1. That's a pretty big drop. Joining us this morning, Allianz Chief Economic Advisor Mohammed El-Arian is with us. Mohammed, it's a treat for us to be able to get your take
on
the news of the day. I did read this morning that you feel that this news out of the Middle East is net maybe stagflationary. Does that explain some of the action in treasuries?
It is stagflationary. The question, Carl, is how stagflationary is it? And that's a function of what you just talked about. How many more attacks are we going to see from Israel? What will retaliation look like? So we don't know, but the direction of travel is clear. What's happened to Treasury is due to something else. The world is losing confidence in the sovereign side of the U.S. So if you're looking for safe haven flows, you won't find them in the Treasury market. Why? Because the world starts overweight the U.S. So there isn't much appetite to increase your overweight on the bond side. The other thing that's good for the equity market is you hear investors distinguishing between the sovereign side and the corporate side. And that's why the equity sell-off is not as big as you would have expected otherwise.
So those who are looking to either lighten up U.S. or hedge their U.S. weight, they're going to do it on the
I heard what he just said.
Sovereign debt side as opposed to equities. Is that fair?
The world is losing confidence in the U.S.
They come to it very quickly.
So less and less people want to buy those treasury bonds. And those treasury bonds are basically other, not just countries, but people investing
had an article a couple of days ago. Gold
and loaning America money.
Largest component
it's bad business.
Central bank international reserves. And that's a function of people looking to reduce their U.S. bond exposure.
But, I mean, we haven't really seen evidence of that, Mohammed, in the auctions. There's been plenty of demand for that. And when there's a weak economic report, people rush back into treasuries. And then, like I said earlier, it's not like the European bonds are rallying right now. It's not. It could just be that the takeaway from this is that we might see higher inflationary pressure, as you said, and ultimately that's going to make it harder for the Fed to cut rates.
Yeah, I wouldn't look at the auctions too much because there's a lot of stuff maturing.
I'm thinking about taking a swing trade, guys.
That's what really matters.
I'm thinking about doing a small swing trade.
Also, Sarah, treasuries
to the short side. I'm thinking about going short. Let me move this. Let me get back to where I usually be.
On day, they sell off on a risk off day.
I'm thinking about going short.
They sell off with the dollar weaker. So what we're seeing is treasury yields have become less predictable compared to what's happening elsewhere in the market. What we're also seeing is gold has also broken its correlations, and it's tend to goes up despite what's happening elsewhere. So I think if you look deeply,
about a week,
you would be worried, and that's part of a bigger issue, is that the global order relied on the U.S.
You got to sell off.
Right at the core of it. And what we are seeing are little pipes being built around the U.S. This is a very gradual
142
of the global order, but it's something we have to pay attention to.
Yeah, well, it's a significant.
We also got support down here, 142.20.
Safe haven in times of turmoil, Mohammed. So I'm curious, though, what could change that dynamic or exacerbate it on the other side? I mean,
I should have got the short up here.
A good thing in your opinion?
I don't know what I'm thinking.
As well to sort of the tariff regime and some hostility.
I don't know what I'm thinking about. I should have got that short.
I think first,
once we got up here,
use volatility. That's something that the rest of the world isn't used to. The U.S. is supposed to be the most predictable player. The second is the extent to which the market implied probability of recessions has gone all over the place. Remember, we started the year with less than 10% market implied probability of recession. We went up to over 70%. Now we're back below 30%. That's not supposed to happen for the largest economy with the most mature institution and the most dynamic private sector. People are paying attention to that. So what you need is more predictable policies, and you need the restoration of this trust in U.S. growth exceptionalism, which is something that has benefited not just the U.S., but the world.
Meanwhile, Mohammed, on another day, we might be talking about trade and the progress of getting more frameworks. Some headlines today talking about how India is hardening its position, Japan hardening its position regarding some of the auto tariffs. Do you get a sense that at those negotiating tables, they're sensing the vulnerability that you're talking about?
I don't know, Carl, because I'm not in the room, but these are complex issues. There's a reason why people favor a multilateral approach to trade liberalization, and that is negotiating country by country is really difficult. And you risk ending up with a spaghetti bowl of concessions here, no concessions here. So it's just a more complicated task, and the negotiators are now talking about a much bigger range of issues than I think they anticipated.
So, Mohammed, just to get back to your primary statement here about the allure of treasuries, you yourself said there's not many alternatives. So where do you go if you're looking for safety right now? Is gold really the only spot?
And that's the dilemma for a lot of people, including sovereign wealth funds. They know where they want to leave, what they want to leave. They're not quite sure where they want to go. So the process is inherently gradual. It involves inherently a large number of other assets. It is not this for that, because there is nothing to replace the dollar. So what you're going to see is a fragmentation of the system. And it's something that will hurt the US. And that's why it's really important to step back and ask the question, how do we restore the role of the US at the core of the system so that countries aren't looking to do something else, so that countries aren't looking to reduce what has been a structural overweight to US assets?
Mohammed, our thanks to you on an important day. Appreciate it very much. Mohammed El-Arian.
Here's our roadmap for you for the rest of the hour. Former Trump National Security Advisor H.R. McMaster joins us with his first take on Israel and Iran and what could come next.
Plus, oil expert Paul Sankey is going to join us right here at Post 9. We'll talk about, of course, what's next for oil prices as well.
Talk to former Dallas Fed President Fisher about this new inflationary input ahead of next.
Wow. Was y'all listening to what he said? If you wasn't paying attention to what that man was saying during this whole segment, you need to rewind it and then listen to the full context of what he really said and take notes. See, that's what I love about live streaming and YouTube. I'll be able to go back and really, because I'm doing 3 things at one time. I was here, if I hear trigger words, I would listen, but I really wasn't, my 100% focus wasn't really on what he was saying. So that's the great thing I love about YouTube and live streaming. I'm going to go back and break down, and I'm going to go take notes on what that man said during that segment. Valuable information that we could use to prepare for the future. That's real, that man. Yeah, he was saying some stuff. Yeah, it was valuable, real valuable. A lot of countries not just countries, but even individual people are losing confidence, in America. Less and less and less people want to invest in America. Less and less people. Countries. Companies. Don't trust it. In other words, like in the past, you can buy U.S. Treasury bonds, basically loan America the money, and you get a guaranteed rate of return per year. If you loan America money, they pay you back interest at a set rate. But nobody wants to take that chance. Less and less countries, companies, people are wanting to invest in America, loan America money. So it's costing America, okay, we need your money, right? So I don't know, America. I really don't know. Well, instead of me giving you 12% on your money, this is what we're going to do. We're going to give you 18%. You loan, and an example, you loan me $1,000, and I tell you, hey, I'm going to give you, you loan me $1,000, I'm going to give you $100 extra for loaning me the money. So when I give you your money back, I just don't pay you the $1,000 back. I pay you $1,100 back. But you're not confident, right? You're not confident in the way I do business anymore. So you say, look, stock sniper, I'm not loaning you that money at that rate no more, bro. You got to give me a little bit more back. And you say, well, man, look, I will loan you the $1,000. This time, bro, I really don't want to do it. But you got to give me back, instead of $1,100 like we usually been doing, you got to give me back $1,200. That's what's going on. In simple terms. And when the Treasury bond interest rates go up, guess what that does? The market don't like that. And it makes the overall market go down. And on the flip side is if the Treasury yield bonds interest rate is low, the market likes that. That's how it goes. In simple, explanations.
But we'll see. It's very scary, obviously, because I'm not here to say they won't attack. I'm sure they want to.
What about the Strait of Hormuz?
Yeah, that's obviously the major concern. I think Iran would know that all hell will break loose if they shut the strait. I'm sure Donald Trump is going to be forefront of that, unleashing of hell. But at the same time, we've had a range of major assassinations here and other stuff. I mean, this is a serious situation. It's a war.
That's exactly what Piper said this morning. This is a war. It's
So
not like the exercises that we got in 24.
Well, I would say that Israel and Iran have been at war for probably 20 years now, effectively. So, it's not a total outside-the-box shock. Israel attacked Iran. I think you could read between the lines and see that it was coming, kind of thing, certainly in retrospect, as always. But ultimately, the fact is that I'm very hopeful that Iran won't attack any oil infrastructure, and so far they haven't, as best we know.
Paul, appreciate it. Thank you.
Pleasure.
Thanks for your time.
Thank you. Still ahead, former Trump National Security Advisor H.R. McMaster said in January that there was a, quote, 100% chance that Israel would target Iran's nuclear infrastructure. He's going to join us with his take now that it's happened. Plus, former Dallas Fed President Richard Fisher on how this new wave of uncertainty and the rise in oil prices could impact the Fed, which does meet next week. We'll be right back.
Hope y'all having a great day. Appreciate y'all for joining me and rocking with me. It is Friday, so it's not raining here anymore as of right now. So it was pretty good that we did get a cool off. But I like to be out there in that sun. We got Flag Day, the 250th birthday of the Army. So Army 250th birthday is tomorrow, which they're going to be celebrating, which is also Donald Trump's birthday. So we're going to have to see what that is going to look like tomorrow. Let's see, we're going to keep that right there. We see that downtrend. Keep it just like that. On the SPY, S&P 500. Nvidia's still dumping, guys. Still dumping. We are right coming on an hour. 1 hour. The SPY dumping now. Wow. We were doing good, man. We were, let's see, on the overall stock market, the S&P, we were doing good. We were well over 600. We was coming up on 604, trying to get back to the all-time highs. We was trying to break all-time highs. We were getting there until Israel attacked Iran. That with the other news that happened last night. Two things happened last night. I don't have the full information on what else. But I know the main thing what happened last night is that Israel attacked Iran. And you know, if it's war or anything like that, that's going to affect the investors. Because you don't know what's next. Especially over the weekend. But one might say, well, man, why you ain't go short, Stock Sniper? Because I was late. I was late to the party. I should have shorted from up here. Like right now, it's like too much of a risk. Because it's already, you know, it already done dropped a whole lot. Even on the S&P 500, I should have shorted from up here. So we're 1 hour in. Of course, it's going to be probably slow and downward movement, probably for the rest of the day. But now that I take off my, I'm gonna take off my day trading hat and put on my long-term investor's hat. It's possible a good buying opportunity, you know, just to stash away a few shares here and there on your favorite companies that you know, like, and trust. I'll tell you, today is Friday, guys. Yeah, I think I'm gonna go on. This is gonna be it. It's time for me to get away from this office and go on and enjoy my day. Appreciate y'all for rocking with me. Hope y'all have a great day. I might go live later. Appreciate y'all for joining me and rocking with me. Everybody that's been subscribing to the channel, everybody that's been liking and sharing the videos and commenting and showing the support. Really, 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 really appreciate it. What I'm gonna do, I'm gonna go back and I want to listen to that, what that man was saying in full context, because I really wasn't paying attention. So that's the lovely thing about YouTube. Shout out to YouTube, is that I can go back and rewatch these lives, and really, really, really take notes and really be a student to really see what's going on so I can make plans for the future. That's what I love about YouTube. Wait, let's see what's going on.
You have a former U.S. Secretary of State and national security advisors and others still under threat here in the United States. So I think Iran will do everything they can to respond, but their ability to do so has been greatly diminished, largely because of the decisive actions.
Oh, they talking about the war to see if Iran gonna respond. So they're waiting to see if Iran gonna respond and what's gonna happen. So I love and I appreciate y'all, everybody that's been rocking. I love and appreciate y'all, everybody that's been subscribing. I love and I appreciate y'all. Over here I try to push out the best things, great information, great knowledge. We do have people that come on here in the chats and add to it, right? And I really, really appreciate y'all that come and give y'all 1,000% knowledge. Really appreciate it. It benefits me. It benefits my family. And it actually helps other people that watch in the future and in the present. So with that being said, I love and I appreciate y'all. 704 Wall Street is my block. 704 Wall Street is my block. Earn, spend less, and invest. With that being said, it's the one and only Stock Sniper. Y'all have a great day. Hope you have a great weekend. To the next one, I'm out.